Welcome back. It's here. We're finally comparing the 2024 policy platforms of the Democrat and Republican parties. Previously, we discussed each party's platform individually, but now it's time to put them side by side. We're diving deep into estate taxes, capital gains, 1031 exchanges, the stepped-up tax basis, and general tax environments. So, without further ado, grab a drink and a snack, like and subscribe, share the video with a friend, and let's get into these tax policies in your estate plan, starting with estate taxes. Starting with the Democrats, they're emphasizing the closing of tax loopholes and ensuring the wealthiest Americans pay more in taxes. While they haven't explicitly proposed changes to the estate tax exemption or rates, the party's focus on reducing wealth inequality suggests a possible reduction of the federal estate tax exemption from its current high level of $13.6 million. They also call for the elimination of the stepped-up basis for the wealthiest Americans, saying, in no uncertain terms, will eliminate the stepped-up basis loophole for the wealthiest Americans so they can't avoid paying taxes on their wealth by passing it on down to heirs. Republicans, on the other hand, haven't explicitly addressed estate tax changes in their platform, but generally favor tax cuts and preserving wealth transfer mechanisms. Historically, they've opposed lowering the estate tax exemption or raising rates. The Republican agenda is all but guaranteed to include making the Trump-era tax cuts permanent, which features favorable estate tax provisions. Project 2025, and of course influential conservative policy proposal, even suggests making the current higher exemption permanent and reducing the estate tax rate to no more than 20%, which would be half of where it's at now at 40%. Quote, Republicans will make permanent the provisions of the Trump Tax Cuts and Jobs Act that doubled the standard deduction, expanded the child tax credit, and spurred economic growth for all Americans. My take, estate taxes only affect a fraction of a percent of Americans, so changes here aren't going to impact the average person. The Democrats argue that maintaining or increasing estate taxes is a way to reduce wealth inequality, while Republicans see it as a burden that unfairly impacts families passing down generational wealth. I tend to think that increasing the estate tax exemption and lowering the tax rate primarily benefits the ultra-wealthy, the 0.2% of Americans who are subject to the estate tax in the first place. If Democrats are in power, they'll allow the Tax Cuts and Jobs Act to expire, which, among other changes, would cause the estate tax exemption rate to fall to about $7 million, remaining indexed to inflation. That means it would still be high, not impact most folks, and continue to grow over time. However, that does mean, for wealthier Americans, they may consider gifting large or highly appreciating assets now or next year while the exemption rate is still high. Alternatively, more complicated irrevocable trusts like grantor retained annuity trust or dynasty trust may become more popular to remove appreciating assets from your estate, thus minimizing future estate taxes. If Republicans are in power, then assuming they decide to stop fighting with each other enough to pass legislation, then they'll likely aim to just renew the TCJA and move on. That means likely maintaining current estate tax plans and perhaps planning for multiple generations to take advantage of higher exemption rates. Moving on to capital gains taxes, and again beginning with the Democrats, they aim to end preferential tax treatment for capital gains for high earners, meaning those making more than $1 million would see a capital gains taxed at ordinary income rates rather than the 0, 15, or 20% it currently rests at, depending upon your income. We'll end the preferential treatment for capital gains for millionaires so that they pay the same rate on investment income as on wages. End quote. For those of you in California or other high tax states, this could push combined federal and California capital gains tax rates well above 50% for wealthy Californians. On the Republican side, unsurprisingly, they oppose raising capital gains tax rates. They support making the Trump-era tax cuts permanent, which includes maintaining lower rates on long-term capital gains. Again, quote, Republicans will make permanent the provisions of the Trump Tax Cuts and Jobs Act and pursue additional tax cuts. My 2 cents, capital gains taxes are something most Americans will encounter at some point, whether they're selling stocks, real estate, or other investments. Going after capital gains for millionaires could be a double-edged sword. While targeting the ultra-wealthy makes sense in theory, it could also hit retirees or long-term homeowners who've seen their properties appreciate over decades. The Democrats' approach could lead to a significant tax increase for high net worth Californians, particularly if they are already paying the state's high income tax rates. It all depends on implementation. And frankly, the capital gains tax rate is something that is often brought up in election season. I remember hearing a lot about it when Romney was running against Obama back in 2012. I don't foresee the long-term capital gains tax rate equaling ordinary income tax rates anytime soon, but who knows? If capital gains tax rates stay where they're at, then we would have more flexibility on when to sell appreciating assets. But if capital gains tax rates rise, then that would encourage more holding onto assets to avoid or delay the tax, thus reducing liquidity in the investment markets. That is, unless you begin tax loss harvesting where you sell underperforming assets to offset gains, reducing taxable income at higher capital gains rates, something that you likely need the luxury of a lot of assets in order to pull off effectively over time. Speaking of pulling something off effectively, let's move on to 1031 or like-kind exchanges. Dems are coming in with a strong stance here, looking to eliminate 1031 exchanges, which currently allows real estate investors to defer capital gains taxes when reinvesting in like-kind properties. I'm sure the fact that the Dems' final boss is a wealthy real estate investor has nothing to do with this policy. Snark aside, if you are looking to eliminate a tax strategy often used by wealthy real estate investors, then 1031 exchanges would be on your radar. The Dems go as far as to call it out specifically in their party platform, saying, quote, "Will also eliminate the so-called like-kind exchange loophole that allows wealthy real estate investors to avoid paying taxes on real estate profits." Republicans, on the other hand, don't explicitly mention 1031 exchanges. Their focus on tax cuts and investment incentives suggests they support preserving this real estate tax deferral strategy. Plus, if the guy at the top of your ticket is a massive benefactor of a policy, you probably won't be in a hurry to sign a bill getting rid of it. Eliminating 1031 exchanges might be more of a political talking point for the Democrats than an actionable policy goal. Yes, it can be seen as a tool for the wealthy to defer taxes, but it also helps many middle-class real estate investors grow their portfolios. Conversely, Republicans' likely support for maintaining 1031 exchanges makes sense, given their general focus on minimizing tax burdens and promoting investment. On the extreme end, I could envision a world where the estate tax exemption amount is reduced and 1031 exchanges are eliminated, thus allowing the government to collect a lot of taxes from those with money to invest and pass on to heirs. However, I don't really see those two policies as on the table right now. The estate tax exemption was set to over $5 million and indexed to inflation during the Obama administration, so I don't anticipate Democrats going back on that. And 1031 exchanges have been around for 100 years, so my bet is it'll be around for probably another 100 more. Let's take a detour to unrealized gains though. Kamala Harris does endorse a plan to institute a 25% tax on unrealized capital gains, as in the appreciation on an asset that you have not yet sold. However, the plan specified that the tax would apply only to those with wealth exceeding $100 million, as in not the middle class. Given the fact that those with wealth exceeding $100 million is only about 0.01% of Americans, any tax on their unrealized gains would not likely cause an economic calamity as claimed by Republican hopeful Vivek Ramaswamy. Frankly, I think we can just ignore this story altogether. It would be extremely difficult to actually implement, potentially costing more than what it would bring in, and we don't currently have the infrastructure to even try to collect such a tax anyway. It wouldn't be popular with wealthy donors, it wouldn't be popular with the middle class, even though it likely wouldn't impact them. It doesn't have much support, so it would likely get cut from any tax legislation day one. If you're a Democrat, then I would recommend you just drop this talking point altogether. If you're a Republican, however, you should probably be shouting it from the rooftop. Regardless, it's not going to happen. Don't even waste your breath. I'm already wasting too much time talking about it, so let's move on. The Democrats want to eliminate the stepped-up basis for the wealthiest Americans, which would subject inherited assets to capital gains taxes based on the initial purchase price rather than the value at the time of inheritance. Quote, "Will eliminate the stepped-up basis loophole for the wealthiest Americans so they can't avoid paying taxes on their wealth by passing it on down to heirs." Where have I heard that before? The only space for wiggle room here is the definition of wealthiest Americans. What do they mean by that? Based on the policies we've been discussing up till now, it's likely referring to the wealthiest class of Americans rather than any middle class. The Republicans, however, will want to preserve the stepped-up basis, allowing heirs to inherit assets without paying capital gains taxes on the appreciation that occurred during the original owner's life. They don't even talk about it, it's basically a given. Eliminating the stepped-up basis is another way the Democrats aim to ensure the wealthy pay more in taxes. However, this change could significantly impact families looking to pass on generational wealth, especially those with valuable assets like real estate. For many, the stepped-up basis is a key tool for building and preserving family wealth. The Republicans' likely stance to preserve this rule makes sense given their platform's broader goals. Again, the step-up in basis is not like to go anywhere. Everyone can benefit from it, whether working, middle, or upper class, so doing away with it would probably just make everyone mad all at once. This leaves us with the child tax credit that the Republicans mentioned when discussing making permanent the provisions of the TCJA. I didn't mention it in my video focusing only on the Democratic Party's platform, but I did mention it in the Republican platform video. The child tax credit is a tax benefit granted to American taxpayers with children under the age of 17 as of the end of the year. For the 2023 tax year, which is the return filed in 24, the credit is $2,000 for each qualifying child. Both parties are actually advocating to increase this tax credit. The difference is just by how much. While Trump himself hasn't given a specific figure, only signaling that he would support a generous child tax credit, his VP pick has said that he would like to see the credit beefed up to $5,000 per child, though he would have to see how viable it would be in Congress. Harris, on the other hand, has proposed to restore the 2021 American Rescue Plan Act's enhanced credit of $3,600 per child, which was only in effect for 1 year, as well as create a $6,000 credit for newborns. Generally, the Democratic and Republican platforms for 2024 present dramatically different approaches to estate planning, taxes, and wealth management. The Democrats aim to raise taxes on high-income earners and close tax loopholes, including eliminating the stepped-up basis and 1031 exchanges. Folks may need to implement defensive strategies to minimize the impact of these changes. On the other hand, Republicans are committed to maintaining the Trump tax cuts and preserving favorable treatment for capital gains, real estate transactions, and estate taxes. Their policies are likely to allow high net worth individuals to focus on growth-oriented strategies. But what do you think? Do you think these policies are crazy or on point? Do you think it's all a bunch of malarkey and you can't wait for this election to be over? Let me know in the comments below. For now, thank you for watching. Like, subscribe, share the video with your kids. I'm attorney Andrew Bethel, and I'll see you at our next meeting.